Bull or bear? Got a good spin on this one today. And using the old 1 ounce bull or bear coin, I started this show with, comes up a bear. Good morning, folks. What's up? This is Brian Kuzmar. I think I scared the fish. Brian Kuzmar with Commercial Ware Coins and Precious Metals in beautiful Lauderdale by the Sea. I've got the live Deerfield beach cam up right now. A lot of look downs right there. We're just sitting near the camera, but it looks like something spooked him off. And there we go, right there. There's Mr. Barracuda right there coming up, one of the apex predators down here. All right, well, hey, happy 4th of July to a belated happy 4th of July to all you folks. And this holiday was made possible by citizens with guns. Happy Independence Day, or should I say Insurrection Day, actually, if you're going to be more correct about it from the viewpoint of the British at the time. Hey, one man's freedom fighter is another man's terrorist, so they say. Well, let's get into spot prices right here. And, things are kind of recovering a little bit for gold. Remember, folks, there's nothing natural about these markets for the most part on the short term, or there's nothing natural why gold is at its current price and silver is at the current price of $23.13. Excuse me one second. I can still hear that water in the background. I think I left the volume on there. Give me one sec. There we go. And yeah, folks, nothing organic about these prices. Gold prices, if you were to take a look at the true supply and demand fundamentals with gold, silver, and platinum, and not the crooked COMEX derivatives markets that drive these markets in the short term. Now, notice I said short term, especially when it comes to gold. Gold, they don't have enough money. These big, collusive commercial U.S. banks don't have enough money to really bully the price of gold around for more than a short period of time. In short periods and short bursts. Basically, what you've got going on with gold is it's a world market. It's dominated by many different players, not just big collusive commercials like you see in the silver market, and more than likely the platinum market. Man, I've got some noisy doves sitting around here. You can hear them in the background. They're really going off today. All right, let's take a look at where we're at currently, 1926, 23.12. Back up to above that $23 mark with silver and platinum sitting in the unloved platinum sitting in that low 900 range. And palladium, who cares? Hardly anybody talks about it, hardly anyone buys it. I mean, crap, we probably sell 1 ounce of platinum for every 500 ounces of gold we sell, believe it or not. Palladium's even more than that, bigger ratio than that. But no less, folks, these prices are still dirt cheap, inorganically dirt cheap. Prices derived simply by a bunch of collusive commercials that make their money dropping these prices down and luring the managed money back into their contracts, short contracts, and then popping them again. So, I mean, same old story, same old shit, same old players, and the lack of regulation by the same morons at the CFTC group. But you know how I feel about that. Something we haven't talked about for a while, and why you should be very happy to be in the price of gold is, look at this CPI index. This is the last year, folks. This is not the lifetime of it. Here, let's look at the max here. As you know, this is why you want to own gold. Not because I'm telling you to buy it, not because it's a 5,000-year track record of holding its value and being real money, not because of that stuff, not because again, sales techniques or marketing techniques, and it's got history, man. And history shows that as long as this fiat, especially since 1913 with the U.S. dollar, when the Fed started taking over, look, the buying power of the U.S. dollar just declines rapidly. And again, when I say the buying power of the U.S. dollar, don't confuse that with the CPI, or not the CPI, but don't confuse that with the dollar strength and the basket of currencies that the dollar is compared to. Because really, that's just, imagine this is not just the U.S. dollar. Imagine this is a race, and here's the U.S. dollar in lane 1, and lane 2 is, let's say Britain at the time, back at that point, France here, Russia here. All these fiat currencies are in a race downhill, in a race to basically being worthless to some point. That's what happens. Intrinsically, this stuff just goes to zero at some point. But look, folks, this is why you want to own gold. Why do you want to own gold? Because as you see, this chart is declining. What is gold doing? Gold is doing the exact opposite of this chart. Gold is going up at this point right here. Now, there's some times right here where it diverges from that chart a little bit. Here's something, and here's the reason why. I mean, good article on Zero Hedge that you can read, Visualizing Gold Price and U.S. Debt from 1970 to 2023, again, which is about the Nixon era to current times right here. I'm going to read a little bit of this because it's so short. Gold has long been considered a store of value and hedge against economic uncertainty. Over the past 5 decades, its price has been closely intertwined with concerns surrounding the growing U.S. public debt. This is something we talk about. And what does that have to do? That has to do with this inflation, the consumer price index, all this stuff. Using data from In Gold We Trust and the Federal Reserve Bank of St. Louis explores the relationship between gold price and the U.S. national debt. Let me click this real quick, get a little clearer view of I think it's very interesting. Again, we were just looking at the consumer price index chart there, or the, what's that, CPI? Yeah, consumer price index, the buying power of the U.S. dollar. And here you go, gold price versus U.S. debt. And you can see here the price of gold as the U.S. debt increases, the price of gold increases as well. But what's missing here is not just U.S. debt has increased, but they've deflated the dollar to help pay that debt. That's how they pay debt off. They just deflate the dollar and give you more of it, okay? Gold is often seen as a store of value and hedge against economic uncertainty. As a result, when concerns about the U.S. debt and economic stability arise, investors tend to flock to gold, driving up its price. In 2021, U.S. public debt surged as the government allocated over $5 trillion to fiscal stimulus, and there you go. But what does that also do? It's not just about the debt, folks. It's not entirely. In fact, really what it's about is just endlessly printing money. That $5 trillion came out of nowhere, all right? It's a little confusing because you say, well, okay, the more debt, the price of gold goes up. It's not the debt necessarily. It's the money they create out of thin air that create, the solution for debt is creating money out of thin air, and that's basically why you're seeing the price of gold go up, because money is getting cheaper and cheaper and cheaper as they print more of it out of thin air. That's the simplest way to say it. Here it says U.S. total public debt has risen annually, except in 2000 when it decreased by 2% due to factors like robust growth and budget surpluses. Boy, you won't hear that again for a long time. And likely it was just bullshit then. But again, take a look at the price of gold as the U.S. debt kind of surges up. But again, it's really about the cheapening of the dollar. All right, another good article here. Well, hold on a second. Let's see if we finished that one even. Let me go back. And there's another chart down here that I thought was kind of interesting too, comparatively speaking. Look at this. I forgot about this. 2010, right after the 2008 crisis, the financial crisis where they bailed out their buddies, all right, is when we went into trillion-dollar debts. Since then, look at that. It's almost double 2010. 12 trillion. 23 trillion, 31 trillion, 2023. But again, folks, that's debt. And don't confuse debt with the price of gold going up. It's what debt creates. That debt creates more printed money. And that excessive amount of printed money is what is causing the price of gold and U.S. dollar, gold to go up. Let's see, we'll finish the rest of this. And let me kind of reduce that a little bit. Looks like we got a couple mistakes. Looks like there's a little page reading mistake here. Where are we? $31 trillion in debt. Let me reload that, by the way, here. See if I can do a quick reload so I can read that a little bit better. There we go. The U.S. national debt is the amount of money the federal government has borrowed up to cover the outstanding balance of expenses incurred over time. Every fiscal year, if spending exceeds revenue, as you know, the federal government borrows money by selling marketable securities such as treasury bonds, bills, notes, floating rate notes, and treasury-inflected TPSs, tips, to cover the deficit. That's where the banks can go and borrow money if they need to, as long as they use those particular assets to borrow with. But folks, what you got to remember, these assets, treasury bonds, bills, notes, floating rate notes, all this stuff, is money created out of thin air. There's nothing backing it. It's a naked short position. It's fiat to its nth degree, okay? That's where we're sitting right here. they're loaning money. That's what TIPS is on. They're loaning printed or money created out of thin air by taking collateral that was created out of thin air. I mean, my gosh, it's almost ridiculous. All right, let me move along here. The American public debt has risen annually since 1970, except in 2000 when it decreased by 2%. Okay, blah, blah, blah. Over the decades, you know what, nope, I didn't read that part right. Looks like I thought I read that over, but over the last few decades, the national debt has grown from 370 million, folks. People buy boats for $370 million now. Yachts. People buy yachts for $370 million. That was our national debt in 1970. You can't even build a shopping mall for $370 million now, folks. I doubt it. A decent sized one or what? $370 million is nothing now, okay? Compared to what it costs to, right. Just compare it to whatever you want. In 92, an all-time high. 31.4 trillion. That's just unthinkable. In 2023, recently sparking debate in Congress to increase the debt ceiling to avoid. Oh my gosh, default. Yeah, you know what happens in a default, a government default, when they don't hit that debt ceiling. All these congressmen, senators, and all these government employees that ain't worth the salt to blow them away. And I don't mean that way, but you know what I mean. Ain't worth shit. Needless organizations, needless, endless amount of federal employees out there, and I'm sorry, I am bagging them. They wouldn't get paid, all right? Average Joe Blow probably wouldn't notice jack shit, more or less. Yeah, maybe the EPA would be closed for a couple days, and I call the EPA every day, just like you, so that would really hurt me. Give me a break. The number is even higher considering federal unfunded liabilities. These are future financial obligations. You can read the rest of this here, or you can read it while I'm talking to you. But no less, take a look at that. That's just amazing. 372 million in 1970 to 31 trillion. Why have trillions when you can have millions, right? Give me a break. I mean, it's just insane, folks. It's clown world for sure. Yellen panics as BRICS Independence Day comes. A lot of folks are going to talk about this BRICS Independence Day. All the talking heads on YouTube in the precious metal markets are going to. You know why all the talking heads are going to be talking about it? Because there's nothing else to talk about when it comes to precious metals. If you've already covered manipulation and you've already covered debt, the reason why you want to own gold and silver, how long it's been around, which we've covered 1,000,000 times, there's not much more to talk about. So they're going to rehash this BRICS things over and over, and it's something we've talked about for 3 years now. I mean, this is nothing new for us. I've talked about the weaponization of the dollars prior to even doing YouTube videos and how the implications of that would come one day as these countries figured it out and just kind of figured a way to get away from it. And here we are, and everyone acts like it's a big surprise and it's like news, something to read about. But anyway, interesting, had to bring it up because like I said, there's not much more to talk about. Did the BRICS just declare independence? Good article by VBL, like his stuff. Significant monetary geopolitical stories. China owns the whole solar supply chain, which is kind of interesting. If you think about it, if we're talking about moving into solar energy, then guess who's got the upper hand in this deck or in this card game? It's China. BRICS gold currency is coming. I know we've been talking about that for a while. How will that affect the price of gold? I don't know, man. I've got some thinking in the top of my head that it's very possible. Don't trust the BRICS nations any more than you trust the U.S. Fed or the Treasury Department of the U.S. government. Trust me, don't trust them anymore. They're no better. They're just as crooked, just as bad. It just happens to be that they're doing their own thing right now, but they're all crooked bastards out there. If they get the opportunity to manipulate the price of gold for their advantage, for the BRICS, they'll do that, all right? Bloomberg, silver shortage and solar demand. Bloomberg, I wouldn't read that garbage if you paid me. Oh, that's right, they want me to pay them for that, but no less in my opinion. Silver shortage and solar demand, they're finally catching up that there might be a silver shortage. Jeez, give me a break. Again, this is news to people, right? Not news if you've been listening to me for the last 3 years. Reuters, India refinery using yuan for oil. This is all kind of stuff that we've talked about for quite some time. Again, not bagging VBL for putting this stuff out there, just kind of saying this is not news. This is just stuff that has been written on the wall for quite some time. All right, let's move into something else here. You know, and why things. You know, the thought is that you know, the U.S. dollar strength. That's what people talk about. Oh, the dollar's strong. The dollar's strong. Interest rates are up. You know, and as long as interest rates are up and the dollar's strong, that's going to be you know, a weight on the neck of gold. You know what I'm saying? And it's not, folks. It's not, because, you know, in the real world with real numbers and get, you know, yeah, you were getting real yields, and yields were truly above the inflation rate. Yeah, perhaps that might be true, but that's not true at all. Real yields, well, here we go. Here's a chart right here, and as you can see, the price of gold is going up significantly, even with real yields going up. 10-year treasuries at 1.65. Gold has continually climbed. There's a, again, the only time that you hear people talk about real yields is when they're about ready to smack down the gold price, or the gold price about to get smacked down because the Fed's going to raise rates a little bit. But again, it's like saying the strong dollar. A strong dollar doesn't buy more. It just means the stronger dollar against the other turds in the race downhill. And the same thing with real yields. Real yields are meaningless unless you are using real inflation figures, all right? And they're not, you know. But anyways, this is why you want to own gold and silver and platinum. It's going to defy all this stuff. And anyways, let me get out of there. So another chart we haven't looked at, boy, it's charts we haven't looked at, Dave, is the U.S. United States Misery Index. How miserable do you feel? That could be on any given morning, but for the most part, I feel good. I hope you do too as well. Well, the blue bar represents unemployment, and the red bar represents the inflation rate, okay? And if you go down here, you're going to start to see we were really at the height during the Carter administration, and really not the height of unemployment, but the height of the inflation rate. And that had a lot to do with Nixon taking us off the gold standard. Remember, gold was going up in that $80. They were just printing. This is the beginning of when they just started endlessly printing dollars willy-nilly. In 1970, if you remember, the debt was what, $300-something million. Now we're in the $1 trillion level. You can't make direct comparisons between these lines, but what you can see is that inflation, the official inflation rate, ignore the unemployment rate. I think they screw with those rates all the time, except when they can't, like during this period right here. But take a look, and they screw with the inflation rate as well, but take a look at inflation rates. The reported inflation rates, the official inflation rates, are starting to raise their ugly head again. You're starting to see substantial amount of red there again, which is inflation. And the only times we've really seen that, again, is in the Nixon, Ford, and Carter area, and somewhat into the Reagan area here. So I think, you know, we're in similar times right there. I think we're in a major, well, not we are, 31 trillion versus 300, oh, jeez. Again, unfathomable. All right, let me get out of this. You guys make of it what you want. These are cool charts. You can check them out on your own too as well. They're all free. And last week's video, don't buy these coins and bullion unless, all right, and the unless part really was saying unless you're a collector and you just want to own one of them. As you know what I was talking about. Don't buy silver eagles. Don't buy $20 gold pieces, certified gold pieces. Again, unless you just want an example of them, don't buy them as investment. If you want to know more about that, watch last week's video. Don't buy these coins or bullion unless. All right, let me answer some questions here. Hey, Walter, what's up? Let me get to the bottom. Get to the bottom of this. I'm trying to buy the dip. It's just one giant dip. So really, you can buy the micro dips right now, but we're in one giant man-created artificial dip that we've been in for decades now with silver. So wherever you buy, I'm sure you're fine, because when it starts to take off, when it finally decouples from all the bullshit, watch out below. Watch out above, I should say. 58 and breezing, why is the current price of platinum as much as gold? I was looking for 1 gram bars and premiums. Oh, you're talking about the platinum premiums. That's pretty simple. Remember, and the same thing with silver. It costs as much to mint a silver 1 ounce round and a platinum 1 ounce round or gram bar as it does gold, okay? The factors don't change in that. So that's probably, and there's probably less production of platinum out there because of the lack of demand in smaller increments like grams and 1 ounces. And again, that's my opinion on it. Most platinum actually is probably sold in industrial form, because I don't think there's a huge amount of it in investment type form. In true SHTF, money will be priced in ounces. There you go. I can't argue with that, salty dog. Again, belated happy Independence Day to all you folks. Christina Napolitano, what's going on? You're welcome. I view the 2130 range of coiled spring to new heights. I sold Eagles around 38 to my AS. Great, you made money on the Silver Eagles. I'm glad you did that. Get rid of the Silver Eagles, take advantage of that premium, and buy back cheaper price silver bars and kilos and that kind of thing. I'm sure you did really well. In fact, a good friend of mine went up to the Lakeland show, a friend of mine, Bud, I'll give his first name, and he's known, I've been telling him for a long time, get rid of your Silver Eagles. He went up and he traded his Silver Eagles and a bunch of graded Silver Eagles. I don't know why he ever bought those. He thought they were an investment, but he sold his Silver Eagles and netted like a substantial amount more silver. What a great trade he made. So he ended up with more silver, less bullshit premium Silver Eagles. I like Silver Eagles too, but the premiums I don't like. That's bullshit. On half-ounce rounds at 20 cents, I want to stack back at least half what I sold them. You know, it's just too much money, Mark. Don't buy half-ounce rounds at 27 bucks. Stick with your 1-ounce rounds. You know, you could have bought a 1 ounce at that. You're not going to be trading this stuff for food. Trust me on this. Trust me. You will, you know, in respect that you're going to go to the grocery store and hand them a half-ounce coin. It's just never going to happen. Thanks, Mark. Appreciate you watching, and I think you hit it. I think you nailed it by selling the premium. I say buy new silver bullion. Not even the mint stuff drains supply. The idea is to panic industry and buy future silver. That's how you break the cabal. You can't break the cabal. They have to break themselves, and they do. You give them enough rope, they will hang themselves, that's for sure. And that's exactly what we got going on right now. Coin Geek, Joe McDonald, what's up, dude? Christopher McCormick says gold sovereigns, I assume it's backed by Great Britain, correct? Well, it's not, I don't know if it's, Great Britain backs nothing anymore. That country's gone. It's not, it's just a ghostly image of what it once was, maybe, all right? You know, when I think of Great Britain, I think of the great, I think of the great empire that Britain was, spread across the continent, sailing ships into unknown areas with brave men. You know, now it's turned into a country of wussies and leftists. That's just my opinion. I will buy graded if it comes around the price of non-graded. And trust me, I have a lot of British friends. I feel bad for them. But you know, look at us here too. We got the same issues here. We are where Britain was. You know, Britain, you know, was a great empire, and then it's turned into a small shit countries. We are in that decline as well in this country, unless we turn things around quickly. I will buy grade if it's around the price of non-graded. Also buy Scuffy X jewelry. Yeah, as long as you're buying a cheap premium, that's great. Good deal there, Christopher. I've been at the place in the beginning, very cool place. At that place in the beginning, a very cool place. Man, I forget what I was talking about. Very cool place. Oh, okay. No, I guess I lost mine. Sorry about that. Forgot what you're talking about. Thanks for commenting, Poor Man's Gold. I'll know after I go back and look at the video when I'm done. We can't store gasoline. Yeah, gas banks. Gosh, I remember that. It's funny. Thank you. Walter says, you didn't quite answer my question yesterday, so I'm trying again. I have a low-value retail $30 coin, retail wholesale 20 and an old PC just being in excellent condition. What is the approximate value of the coin plus? If there's variance, give a range, discuss why. Doggone, you are a pushy guy, man. Walter, the reason I probably didn't specifically answer that question is because really PCGS green label, the holder itself, is pretty darn rare. People are collecting the holder. So, I mean, if it's a PCGS green label with a coin that hardly anyone graded, okay, that'll be high on the list of people that collect the holder. Remember, not the coin. So I can't just tell you that a green label $30 coin, you know, or the holder, whatever, I can't tell you that because it really is specific to the item. But in a nutshell, in the rare green labels, in the rare early first generation green PCGS labels, what they call rattlers, what you're looking for is you're looking for the items that were least likely to be graded, okay? That includes low price, and it was expensive then to grade. So if someone sent in you know, a cheap type coin, there's a good example of what's gonna bring a higher premium. But I can't give you specifics, not my market. There's no price guide to this market, and again, it's a newly created collectible markets subcategory in the coin market because you're not collecting coins, you're collecting plastic. I don't get it, but it exists. and that's why I'm telling you guys to take advantage of it. If you got something, Walter, and you want me to find out the value, just let us know. Here, give me a ring at Commercial Rare Coins and Precious Metals, and I'll check with my friend Bill. All right, folks, that's it. If you don't catch me here on YouTube, you can catch me here on this channel, a great free speech channel, underused in my opinion, but I do back up everything there as well, and you can catch my videos there. And if you want to check out a real free speech format, unlike Facebook, horrible man that guy is, Zuckerberg in my opinion, anti-free speech. If you want to check out a true free speech platform, check out Twitter, and I'm on there as Brian Kuzmar. I really should utilize this more and get my name more out there, but man, I just haven't done a lot of things I haven't done, like doing my videos 5 days a week like I should be. All right, that's it, folks. If you're looking to buy rare coins, yeah, rare coins too, but if you're looking to buy gold, silver, and platinum in any amounts, 1 ounce to millions of ounces, give us a call at Commercial Rare Coins and Precious Metals in Lauderdale by the Sea. If you don't have a good local dealer to buy from, we advertise to beat Atmex, SD, and JM Bullion, the big 800-pound gorillas out there who are consistent and are fair and are great companies as well. Because if you want to beat anyone, who do you want to beat? You want to beat the big guys, the good guys. That's what makes you competitive. All right, that's it, folks. Have yourself a nice day, and I'll talk to you tomorrow. Bye now.